The VIX. The VIX is now breaking out. We're likely going to get a massive, big, wide range bar tomorrow or later this week, but it's going to happen. It very well could be tomorrow. It broke out today. Great Scott, did you hear what I just said? The VIX broke out today. There are a lot of similarities to what's going on right now to what happened back in February. We got a hollow red candlestick with the higher low back in February. We got a hollow red candlestick last Thursday, the day after the Fed meeting, a higher low with a hollow red candlestick. Bullish divergences on the MACD. Here we have multiple point bullish divergences on the MACD. You got back above the 50-period moving average. Here, after the breakout of a little bullish falling wedge here, we're getting above the 50-period, back above it yesterday, and we closed above it again today. When you close above the 50-period moving average on the VIX, bad things start happening on the S&P 500, but you got to be able to close above it. So far, closes back above the 50, have stalled at the 200 period here and over here, and that gave us a volatility over the summer. Also back over here in July, we've had that create a compression pattern that is now breaking out. Again, let me repeat, the VIX is breaking out. Last time we got the VIX moving above the center line and breaking out, getting back above the 50-period moving average, we had the February top. The S&P down here in the lower window dropped 21%. And the VIX got above the center line on the MACD. I've marked it right here. And we had a big wide range bar after the breakout. You're likely going to see that tomorrow or the following day. Good chance you see it tomorrow. But if not, you're probably going to see it in the next 2 sessions or so before the weekends. You're likely going to see that happen. But you got a good shot it's going to happen tomorrow. We had the bullish falling wedge. We broke out and the volatility began to increase and the S&P began to decline. The VIX moved above the center line with our MACD, or VIX MACD, and that's what happened today. The VIX MACD got above the center line with the bullish diversions and broke out of the declining trend line. Great Scott, did you hear that? We broke out, and the MACD also moved into positive territory. Last time that happened, you had this happen. You had this happen right there. Okay? Then the VIX began to turn back down after the surge in volatility, and the S&P rebounded back up and got a counter trend. The MACD of the VIX moved down, and it moved just below the center line, and then it firmed up. And when it got above the center line again, guess what happened? We had the breakout, and you had this wide range bar right here, surging back above the 50, dropping back below it, bouncing off the 200, getting back above the 50, and then you had this happen right here. And that was where we surged all the way up here towards the 60 area here on the VIX. You had a massive spike in volatility. So both of the bullish falling wedges and getting back above the 50-period moving average with the MACD moving into positive territory ended up giving us a huge spike in both of those cases of volatility. And the second time you got it, you ended up resuming the decline, and we had that big drop into the April 7th low. Now you've got a bullish falling wedge, a compression pattern. Now you're getting back above the 50 again, just like we did over the summer a couple of times. But this time you're breaking out. You're getting the MACD moving positive. Over here in August, we had it go up to the center line and roll over. This time, it's different. This time the MACD's moved ever so slightly into positive territory today. Just ever so slightly, just by a fraction, but it did it. And you got the breakout in our second close now above our 50-period moving average. But again, this looks very much like this. This looks very much like this over here. If we hold above the center line, the zero level on the VIX, on the VIX's MACD, you hold above the 50, then we're likely going to attempt to get above the 200-period moving average. We're likely about to see volatility begin to soar. What will the catalyst be? Profit taking, all saying the stock market's elevated, government shutdown, long-term yields continuing to rise even though the Fed is starting to cut with short-term rates. Some other catalyst, the post-Fed sell-off, in that the rate cut was already priced in, and now will hopes be dashed of more rate cuts going forward? I think you got a good shot. We're going to sell off into earnings season going into October. I think it's very likely. We'll see what the catalyst ends up being. Powell showed more concerns about the economy, does an improving jobs report, maybe higher inflation. We're going to get the PCE data on Friday. That dash hopes of future rate cuts, the two cuts that are penciled in for the next two meetings here in 2025. Just warning you, the VIX is now breaking out. If it could continue to hold above 50, if the breakout followed by a big surge in volatility like we had over here after the breakout and getting above the 50 here, that bar, we're already above it right now, and over here we had just gotten above it and you had a big surge right after that. I think you're going to see something similar. I think you're going to see a big wide range bar likely tomorrow or the following day. I think it's going to happen. Thursday, we'll get that third estimate for GDP. It's expected to be stronger at 3.3%, which again is another reason why Powell is saying they're starting to cut, is because the weakness previously that we saw earlier in the year with the GDP, if it improves here, continues to strengthen, and the labor data starts to improve, then why does the Fed need to cut? Food for thought. We're going to get the inflation data, the Fed's favorite gauge of inflation, the PCE index. Get that Friday before the market opens. And again, if this comes in hot, the market could get a sharp sell-off. 1 week from this Friday, you get that jobs report, and that's probably going to start improving at some point. If it does it end up dashing hopes of future rate cuts? We'll be watching. Please support the channel with the link directly below. If you follow the link below, it'll take you to a secured site. You can donate any amount you want. If you don't have any sponsors, I turn those offers down. Just ask that you do what you can to help out. So please consider supporting the channel today. I thank you for your consideration for that. We have been monitoring the divergence on the 4-hour chart of the E-mini futures of the S&P 500. Again, we had the divergence form with options expiration, and it's now getting another reference point. If it's done, it's got to go negative, and we got to drop below the 50 period and start moving back down in the 4-hour time frame towards the 200 period moving average. Very similar to what we have on the 60-minute chart. The 4-hour chart of futures is very close to the 60-minute chart in the S&P 500. We're now seeing things turn back to red. If they can remain that way, then we got to now, the next step is to take out the 50 period moving average here in the 4-hour time frame. Even if we try to bounce, bars could remain red, the cloud could remain red right at the rising trend line from the September low. S&P, and we're right at it here with the futures. If we break that level and take out the 50 period, we can start a bigger sell-off, bounce off the trend line. Again, even if you rally back up, as long as you don't move to a new high, the cloud will remain red. So just something I'm paying attention to is this divergence here in the 4-hour time frame with the E-mini futures of the S&P 500. And the fear greed index are diverging, exactly what we had at the February top. S&P formed a divergence over December, January, February, and it diverged. It got multiple point divergences. That's what we've got going on right now. The S&P is in red right here. The fear greed index is in blue. It's doing the exact same thing, and this ended up happening. You ended up getting a major reversal. There was so much complacency because we just kept going sideways, slightly drifting higher, and again, doing exactly what we're doing right now. Again, drifting higher, forming this divergence. You have complete complacency. You have the VIX breaking out. You have a bearish divergence, multiple point bearish divergence on the VIX, on the fear greed index, between it and the S&P 500. And we had a divergence. We had a divergence going on between the 5-day moving average of the put to call ratio and the S&P 500, but no longer. We've now moved back to complete complacency. We saw the raw data drop down to extremes once again. Now we did have that with the February top. We did have that, but we had a little divergence going on there. Here, yes, you could still say we've got one and that we have one, a larger one there. But there's no fear. here in the put to call ratio. We have now total complacency with the option traders. There is zero fear that the market could possibly go down. Okay, the S&P breaks the 3-day winning streak. We turning off of the upper boundary of the rising wedge. Nasdaq's turning down off of the upper boundary of the broadening formation. Nvidia's turning off of the major trend line, and again in the weekly time frame, the Dow was down 88 points, down 0.19%. The S&P was down just over 0.5%, down 0.55%, down almost 37 points. The Nasdaq was down almost 1%. The Russell was down 0.12%, and the VIX was up today, and the VIX broke out. More about that in a moment. This is a huge red flag. Again, we're about to have a post-Fed sell-off. Bitcoin already got it immediately after the Fed meeting. Now the stock market's going to follow Bitcoin. The rate cut is already priced in. Said that the slowing labor market prompted the rate cut. Said the same thing he said at the press conference. A hawkish cut. He sees a challenging situation ahead where we have deterioration in the labor market, possible rising inflation. That's the risk of stagflation. Oh, finally admitted, though, the tariffs aren't causing inflation. I about fell over when I was listening to him, talking about this balance of risks, and he's moving and acting on the weakness in the labor market. Inflation that Powell, Fed, were so concerned was going to show up, it didn't. Told the tariffs were going to be passed on to the consumer. They're not. Nevertheless, I digress. I'm going to see a sell-off. A couple of things. Again, we're going to have jobs report next week. If we see improvement in the labor market, the two cuts that have been penciled in, the betting markets with Fed fund futures and by Fed officials, could be taken off the table. Labor market starts improving and inflation starts rising, then why do they need to cut? They're cutting right now. Powell said it today. They're cutting because of the slowing labor market. It prompted the cut. Now, again, eventually we're going to get a big negative number with the jobs report. Got a negative number already, a small negative number for the revisions with the month of June. Eventually, you're probably going to see positive reports going forward. That could remove the hopes. That could remove the hopes of rate cuts. Eventually, in the coming months ahead, you're going to get a negative report, and that's likely going to be associated with the stock market top, just like it was in 2007. I talked about this at great length and detail. A couple of weeks ago, it was when we got the negative jobs report. We saw the stock market, it ended up peaking with that. I got to see something very, very similar. Now, again, I think we correct, but I still think we got a shot at going higher. Getting a parabolic rally in the final phase of the blow-off top is very, very common. This is what happens. We sell off, we could get a final climax move in the fourth quarter. We could sell off into earnings season, into October, and see a reset. A couple of different catalysts. You got a potential government shutdown. Again, Wall Street doesn't like these things. It's just an excuse to sell. Always end up working it out, and they always end up funding the government. We saw this rattle markets back in 2011. Seen it rattle markets at other times in history. It looks like you might have a government shutdown. We got Powell saying, "Oh, stocks appear fairly highly valued." Asked about the stock market being overpriced. Powell says the stock market's overpriced. Oh, let's run. It's an excuse to sell. So I think going forward, again, inflation data. We're going to get the PCE inflation data this Friday. We're going to get the CPI early on next month, along with the jobs report the first Friday of October. So again, these things to be watching going forward. And again, does the economic data end up dashing hopes that the Fed is going to cut in October and on into December? Just as the S&P has formed a rising wedge on its 60-minute chart and its 15-minute chart, slamming up into the trend line and turning, so Bitcoin did that, going into the resistance zone, forming the negative diversions. The market is now starting to follow Bitcoin again. The rally up in September moved back into a positive correlation, and now the market is following Bitcoin. Expect the rising wedge to break down. Bitcoin has dropped over 5% since the reversal the day after, peaking the very day after the Fed meeting, getting a post-Fed sell-off. Oftentimes you'll get the post-Fed sell-offs right after the Fed meeting on Thursday or Friday. Sometimes it starts the very next week, which is what we're now seeing that likely begin on the S&P 500 and the NASDAQ. But I told you we might have to get past options expiration, and that's why I told you it might go into this week. It didn't with Bitcoin, but it did with the stock market. Now, if I take this trend line up here, we hit the rising trend line, turning down off of the upper boundary of the rising wedge here. Again, the red trend line, the black trend line, I've excluded this area here and just connected it with this peak over here. And with the red trend line, I've included the shadow, and we came right up to it and slammed up into it and turned down, dropping below our 50 period on the 15-minute chart. Coming back to the trend line. Again, likely going to see this rising wedge break down, just like we saw the breakdown of Bitcoin's rising wedge. The divergences have given us a sell-off now here in the 15-minute time frame. You have multiple point divergences, so again, good chance you're probably going to get a reversal here. We're losing the cloud in the 50. You got to take out the trend line and the 200 here if we're going to get a bigger drop. We bounce back up. The 50 and the cloud are now resistance here on the S&P 500 15-minute chart. Small little divergence there at the very end of the session, giving us a bounce off of the lows. On the larger time frames, the shadow is a little bit higher. So I've taken the trend line from that, excluding the shadow here, and we've actually reached the trend line here in the 30-minute time frame and on the 60-minute chart. So if we try to bounce and set up a lower high, we could redraw the trend line from today's low. A good shot that we're turning down off of this trend line. The VIX is now getting a breakout. We're turning off of this trend line on the S&P. We've got the diversions in the 60-minute time frame on the MACD and the RSI. Last few divergences over the summer really just took us sideways. Then we had the September rally bouncing off the 200 period moving average, and now you've got this rising wedge. Bring it up close, like on the 30-minute chart, you can see we're slightly breaching the trend line. If we exclude the shadow here, we're just above our 50 period moving average. In order to get a bigger sell-off, you've got to come down, take out the 52 period moving average, and take out the 200. It is the 200 period that through the month of August, it acted as support. Now, as the S&P turning off of that trend line, the RSI is pushing back now below 70, and the VIX is breaking out. Divergence on the MACD and the stochastic today is rolling over, forming a divergence here in the most recent price action right here. With the Nvidia, the rally we had on Nvidia was up 3.93% yesterday, gave much of it back today, getting a bearish inside day. Do you see that? A wide range bar followed by the inside day right there. We have major resistance being tested yet again. We slammed up into it over here in August. We attempted to test that level. We were slightly lower right there with the earnings announcement for Nvidia there in late August. We sold off 11.25%, and then we've rebounded back up here and moved just pennies above this peak over here from August. You got a possible expanded flat. I talked about this yesterday. An expanded flat correction is a 3-3-5 pattern. You got a 3 and another 3 here potentially, and that's where you go above this level over here, and then you go down and you take out this low over here, and that again could take us towards 140 or 150, moving towards the 200 period moving average on Nvidia. So a bearish inside day today. If we get a strong sell-off tomorrow, we got to close below the previous day's low in order to confirm the inside day. The inside day is a 2-day bearish Harami pattern. Bearish Harami pattern is a 2-day pattern. It's a reversal pattern, but the candlestick means the pattern. It means nothing unless it gets confirmation and a follow-through. Candles have to get confirmed. Otherwise, they are meaningless. Nvidia down 2.82% today, giving back much of the rally from yesterday. And again, moving just slightly higher, pennies higher, you still have this massive multiple point negative divergence. Again, if we do have wave 3 over here, you have a possible expanded flat, which the 335 pattern would be followed by a 5, likely going into the 200 period moving average. Fibonacci retracement. Massive broadening formation. If it's not done, we get one more push after the correction. If it is done, the risk is that it's done. We need to see evidence of the bull market coming to a conclusion. My guess is we're going to sell off and go make new highs. We'll get a good fourth quarter and then we'll peak. But, you know, everybody's so bullish on Nvidia, and all it's done is it's rallied up to. Now, when I call the bottom of Nvidia, I use the Nvidia signals to help me call the April bottom on NASDAQ. Rallied up 114%, but then it's gone sideways since the summer. We hit a peak in July, pulled back, we went slightly higher, topped in August, early August, and we've gone sideways. We'll see if we get a expanded flat where you go slightly higher and then you go lower. And if we do, I'll be watching that 200 period moving average on Nvidia. But it's got this massive broadening formation, and everybody's so bullish on it. Is what I was referring to a moment ago. Everybody's so bullish on Nvidia that we're still not clearing the resistance in the weekly time frame. I showed you that resistance earlier in the week. Nvidia's weekly chart. You know the chart I'm talking about. See it, go watch that video. Again, NASDAQ down about 0.75%. Hit that upper Bollinger Band. Closed above it. After closing back below it here, we bounced off the 10. And the support level from the August, August 15th high. And now we're turning down off of that upper Bollinger Band. Again, we do have some potential reversal candles that we could see set up by the end of the week in the weekly time frame. But here you've got a massive broadening formation. If we zoom out, this is up close, you've got this massive negative divergence that has developed on NASDAQ and S&P. NASDAQ 60-minute chart's got similar divergences. We've come right down to the trend line here, just like the S&P 500. Some intraday charts have breached the trend line. S&P, others are holding it like the 15-minute chart. Rally right up into resistance in that we've hit this upper boundary of the broadening formation on NASDAQ. Nvidia's got the same pattern going on. I think you're going to end up seeing a sell-off. Again, maybe back to this low, maybe something less like I've marked here, maybe something more closer to the 200 period moving average. And then I think you get one final push higher. This is a daily time frame here. This is the weekly time frame here, which we could get a topping tail or some kind of reversal bar off of this trend line in the weekly time frame on NASDAQ by the close of the week. I'll bring this up close and show you. I told you in the weekend video to be watching for a reversal bar on the weekly chart this week. We're likely going to have a post-Fed sell-off. Right now, you got a possible gravestone doji. The week is young yet. We could see something uglier. You could sell off and rebound and end up getting a doji or something like that, or a shooting star. We'll see what happens by the end of the week. By the end of the week, you could have a reversal bar as NASDAQ's hitting the resistance. This is the NASDAQ weekly chart. This is the Nvidia weekly chart getting a potential topping tail. We'll see what it looks like by the end of the week. Here's the Dow that has a Dow theory sell signal with the transports. Here is the S&P 500. The S&P 500 right now is getting a 8 of a 9 count in the weekly time frame. The 8 bar could be the high of the count. Getting a 9-9 reversal signal here with NASDAQ and S&P in the weekly time frame. The S&P weekly chart. So again, I'll be watching. Do we end up seeing some topping tails? What do we end up getting a big ugly red bar, or do we end up getting a doji, selling off, rebounding, whatever it may be? We're looking for something that likely will take us below the 10-week moving average towards the 20-week, maybe as low as the 200 in the daily and closer to the 50-week in the weekly time frame. We'll be watching what kind of candlestick forms by the end of the week. Again, we're likely going to see a post-Fed sell-off and follow Bitcoin. We just had to get past options expiration. VIX breakout. There's no fear with option traders as we're back at levels of greed with the fear greed index forming a divergence with the S&P 500. You have this massive divergence going on here with the RSI. Again, we're likely going to move down towards the lower end of the cloud, maybe towards horizontal support right here, which is our February high, or if we move beyond that level towards our 200 period moving. Stochastic's doing exactly what it did in the weekly time frame back here at the February peak, formed a divergence. Some of these other pullbacks, we had divergences or multiple point divergences on the stochastic. We had a divergence on the stochastic at the 2022 high. We have bullish divergences down at the lows before the counter trend or before the bottom. Pardon me, the bottom just reached an extreme, but you can see the divergence that's developed here at these levels. We still have this big ugly divergence off of extremes with the NAAIM exposure index. Is what money managers are doing. Their exposure to the market, they're all in. Retail has run it up. We'll be watching with the VIX breakout. Do we now start seeing pullback towards the 20 or maybe the 50-week moving average? The 50-week is a green line.